Hi there, and welcome to this week's closing bell. It is, as always, has been another big week in the market. So we've got three big things to talk about on today's episode. One, the S&P 500 still showing bullish. What does it mean? Murray will tell you what it means
But I'm wrong.
and how we've been charted. Oh yeah, well, Muzz, don't spoil the solution yet. We're going to talk about the US dollar, what's going on with the US dollar, and why it's very bullish for a certain sector on the ASX, and we're seeing it play out today, as in fact. And we'll touch a little bit on AI, just a few things that have popped up recently in the Fat Tail office. As you can see, we're actually not in the Fat Tail office again. Murray's putting green is still being put in his office, so hopefully it'll be done by next week for the great man. But we're broadcasting from home. So Murray, how are you going,
I'm
buddy?
great. I'm very good, buddy, apart from the egg on the face with the bloody market not selling off.
Well, let's just touch on that. So you've previously in the last few weeks talked about this idea that it was hitting the sell zone rather, and I myself, you sort of said, look, it feels like it's that rally, it's come back from out of that April crunch, but can it keep going? Well, as it is still going. So do you want to walk us through what's going
Yeah,
on?
well, I mean, thank God I have rules that stop me from doing dumb things and just relying on my gut. Because, my feeling was that it just had to, after a massive smashing like we saw in March, I'm just so used to these big squeezes that get everyone bullish and then rip their face off, basically, with another down leg. And look, maybe that's coming. But, we've got to work out the difference between what's going on in your head and what the charts are actually saying. And that's where my rules to say, look, you may think it should sell off from here, but I actually need to see the selling pressure to actually do something. And I was saying, look, if we've got a weekly sell pivot or, the trend started turning down, then, maybe I'm right about this. And it just hasn't happened. There's been really, the selling hasn't been enough at all. And now that we've had the big Trump bomb happen, come and gone, and maybe the wars finishing and the Hormuz Straits not going to blow up the oil markets. So all of a sudden we've got this uncertainty that's disappeared, and probably people are a bit underweight after all of this uncertainty with the tariffs and then the war, and everyone's going, oh, it's all going to sell off. And since it's not, and it's continuing to gravitate higher and is now testing the all-time highs, now you've just got to say, well, right, the selling pressure isn't there. And are we going to see a breakout? Which could be a breakout with people still a bit underweight and wondering, climbing the wall of worry. What the hell's going on? Why is it rallying? So right now, I'm sort of saying I've got no excuse to have my brain telling me that I'm bearish. Just look at the charts, and the charts are saying, well, it's on the edge of possibly breaking out and nothing stopping it. So let's jump and have a quick look.
Well, just before you
Yeah.
do that, I would say that the market is a constant dynamic thing. It's a moving target. Even this week, oil, I wrote on Monday, it could have gone to $100 had events played out a little bit differently. Now, in the end, things have settled down. So the oil price, that idea has fizzled out and it's settling down now a little bit. So again, this is always shifting and changing, and you can only read it really day by day in many instances.
Yeah, things change, and
So
you've just got to be fluid. You've got to be anyone
fluid is
who's
the word.
stubborn
Yes.
and just says, "Oh, this is going to happen." The market's going to kick you in the bum over and over again until you realise that you actually don't know the future. What I do is try to. That's why I have charts. Why do we have the model? Why do I have the charts at all? It's to stop me from doing dumb things. It's to stop me from thinking that I know. If I have a set of rules that says all of this needs to happen before you're allowed to do a thing, and you have a model that actually reflects sort of what's going on, then you can actually allow the charts to tell you when it's time to do something, rather than going, oh, I think this is a bargain, let's buy it, and you catch a falling knife and you're down 50% before you know it. So having this set of
And
rules stops you from doing dumb things.
I was going to say too that when we were talking about the idea of the market rolling over, we also put a very strict stop loss on it. So very quickly you're going to know if you're wrong or
Yeah.
not. So
And I never got the signal to sell anyway because we never got the momentum go down. So this is where I combine the area where it, the high probability it could have sold off from, but then I need to see the actual momentum turning down before I'm allowed to act. And by having that rule, it stops you from this situation where it just keeps running. So it's like that is a really important part of the whole process, is to say, okay, this is an area where it should sell off from, but I actually need to see the momentum turn down before I'm allowed to act and take on that trade. And in the end, as we'll see right now, I'll just jump to the chart. We never saw
Yeah,
that
jump
sell
onto
off.
the chart.
So this is just the S&P 500, and we've been, I've been wondering which sell-off are we in. Here was the sell-off in. Sorry, I'll just change that to a line. So we're asking ourselves, is it like in 2020 where we just saw the massive sell-off and then a massive run in one fell swoop, which is pretty amazing? Or is it like the sell-off we saw in 22 where you have the big sell-off and then the big short squeeze, which then catches everyone out because then all of a sudden it turns down again and everyone's caught out that got bullish. So I was thinking it was going to be more like that, but in the end, what we're seeing is it's looking, a bit like what happened in 2020, where if we just go up nice and close, and this is where I was saying, look, I really thought that it just couldn't keep running. But if we have a look at the weekly on this, you'll see that we had this absolute massive smashing and then it's rallied back to the upside. And this is where I was saying, look, we've got to watch out here that it could sell off, but I need to see that weekly sell pivot actually, confirmed before I'm allowed to do anything. And this is where it can really keep you out of trouble, because as the prices are marching higher, I'm like saying, well, I need to see a weekly close below the low of the highest candle. So I'd actually need to see a weekly close below that level. And we never saw it. So the price action just was relentlessly strong. And the weekly trend actually turned up here a while ago. And it's just managed to carry on. Now, who's to say it's not going to rally for a bit here, get everyone really bullish, and then collapse? I mean, anything can happen, right? So maybe that can happen, but the fact is you've got to wait. And at the moment, it's looking so strong. How silly would you feel if you're not going with this, if it does just break out here, and then just have a serious move? Because there's nothing stopping it. It's now all-time highs and it's breaking out. So it really is at a point where it could actually just keep running, and the weekly trend's up. So you really got to go with it. So I've bought a few things recently, and I've been long. But I mean, I never got out of anything in that big sell-off. I just held positions because it didn't get bearish enough. But I've been surprised by this strength, and I'm happy about it because all the positions are flying. We got into something last week that's up 12% in a week. So happy days. But that's the situation we're in.
Well, if I had to put it down to two things, I would say that I mentioned this in Fat Tail Daily this week, that the earnings for the US are still growing and they're still projecting them forward. And of course, we still have this massive potential of AI that's threaded through those big US stocks. And I suspect that has a lot to do with the recent strength. I just saw a presentation on it actually, and I still think this has something to do with Commonwealth Bank. Everybody attributes the CBA rise to passive flows and whatnot, but part of the conversation with AI is how these tech companies can now get more revenue per employee,
Yeah.
more productive, more profitable, better margins. And I do feel that has something to do with Commonwealth Bank. But anyway, we'll see how it goes. But as you say, looking bullish. And here in Australia, of course, we have so many mining stocks, and you're going to tell us about what's going on with the US dollar and why suddenly commodities are showing heat.
Yeah, well, that's one of the things that is definitely occurring at the moment. I wrote in the my chart of the day on Fat Tail Daily, which people should be subscribed to, by the way, getting a great chart every single day, and all of your amazing insights, Callum. So if you're not
Oh, thanks,
if
buddy.
you're not a subscriber to Fat Tail Daily, go onto the site, look it up, and subscribe to it. You'll get an email every day with awesome stuff. But in that this week, I said, look, this US dollar, it's looking a bit shaky, and if it heads down below the low of the move, it's really looking like it could trend to the downside quite sharply, and it actually fell over a cent in the next day or two after that chart that I sent out. So thinking about that, the safety bid, everyone looking for safety with the war and all the problems there. The US dollar is usually pretty well bid in those situations. But really big picture, the US dollar is looking very weak, with Trump wanting a weak US dollar, tariffs. They're trying to lower the US dollar to rebalance trade, that sort of thing. And you've got some of the big investors around the world actually allocating more money to Europe and Japan, even pulling money out of the US and reallocating. So there's a very big picture money flow of capital possibly not being aligned to the US as much as it was in the past. And so that US dollar could still have a lot more downside. And of course, the converse of that is a weak US dollar, strong commodities. And we've had copper up 3 or 4% last night. That's over $5 a pound now, and near all-time highs, looking like it could really
That's
break out.
exciting, yeah.
Uranium flying higher with Sprott getting a raising of 200 million away. They said they were going to do 100 million. They did 200 million, and that really affects the spot price of uranium because it's a very illiquid market, and they're going and
Yep.
buying pounds in that. So that's driving massive runs in the uranium stocks. We've got platinum absolutely blasting off like a rocket. I actually went into something last week in that. That's the one that's up over 12% in a week. With platinum prices, we can have a quick look there. So this big picture, US dollar selling off, possibly with a lot more to go. And gold, of course, a beneficiary, but it's already run pretty hard. But platinum, palladium, uranium, copper, all absolutely exploding.
Yeah, no, it's super exciting. So at the start of the year, I went into a copper stock called with the Service Australian Small Cap Investigator called Develop Global, and
That's been absolutely
at the
flying, yeah.
absolutely flying, and they just raised more money, and I thought to myself, look, probably the only thing that can give it another quick fire spark would be a rising copper price, and that's exactly what we've got, and exactly what we're seeing today. So that one's been a belter. So what are you going to bring up for us
The
here?
US
Is this the
dollar,
US
so
dollar?
we're just going to do it quickly on the US dollar, and then we'll just fly through all of those to show you what's actually going on out there.
You've been talking about this for a while too.
Yeah, the US dollar weakness, yeah, absolutely. And
Hmm.
I'm going to kick off by just, we'll get rid of that first and we'll think really big picture. So this is the US dollar over a number of years, going back to 2020. The really big picture on the US dollar, let's start there, just so people really know what's going on. This is the US dollar going back to 1997. So you can see this is where I'm looking at the US dollar in a really big picture sense, that it's actually looking quite weak, is that we've had this massive blow off, that level around 100, 104. It was a major high for a very long time in that US dollar. And we had a big blow off where the US dollar's up, up around 115, flying higher. And now it's done work for years and years and years around this, or a couple of years around this level. And now it's really failing. And that's where it's sort of heading back down into this range. And there's not a lot of technical support around this level. So it really feels like a big picture sell-off in the US dollar that's going to possibly have a lot more to go. So this is where I'm looking at that shorter term and considering the structures of what's going on and saying, well, here's that massive run that we saw over the last few years. And people may remember, I actually called the US dollar a sell. So we've got the buy and sell zones. There's the sell zone and there's the buy zone of that range. So when it was up here, and this is when Trump got in and everyone was so excited, US dollar up, etc., etc. So it got overbought and got into the sell zone area there. So when it turned down from there was when I said, look, watch out on this US dollar. And it has actually plummeted. And now it's really broken through the point of control. It's failed through the lows of the whole structure it's been in for a couple of years. And now it's going down through the lows of this whole move for the last few months. So it's sort of in no man's land as far as the chart is concerned. So the question is, right, well, this could actually just trend. Like it could just trend down into this area until it finds the buying support. And where is that support going to be? So the US dollar at the moment is looking on the edge of going on a quite a sharp and steep fall. And maybe we've got the tariff, things coming up soon. What's Trump going to do? Does he want the dollar to really be a lot weaker? And will a lot of the capital sort of front run all of these problems and start selling that US dollar more or allocating less money, like China buying gold instead of allocating more money to US bonds or whatever it is. So I think that's the theme to be thinking about as we move forward. So that means, the commodities, that sort of thing. This is where I'll jump to copper to show you what's actually going on there.
Now, just to preface this, for the last, oh God, say 4 years, seems like every year the finance industry comes out and says, "Oh, copper, there's so much needed for the renewable transition and all this sort of stuff," and it's never quite delivered the explosive move that everyone has waited so long for.
But
Yet,
because we've had all of these issues of the EV whole thing went down the tubes, growth coming off the boil,
oh,
China
absolutely, yeah,
China demand
weak,
their
yep,
property market collapsing. So we've had all of these things that have ended up copper's been holding in, but all the other commodities have been absolutely hammered in the last few years, and copper's just held in there. So it's almost like the statement when you see something like that where everything else is getting hammered, but you've got one thing that's going sideways for a long time. What that really tells you is when things turn back up, the one that's going to outperform is that one, the one that's holding in there. Because when that blasts off, it's going to go vertical, even though the other ones will recover. But it's
yep.
like the Coke bottle getting shaken up and then it's waiting to take off. So this is where, if we look at copper, and just to show you how that strength again, this is again over a few years, lovely uptrend that's been in place, right? So it's all still been trending. This is what I've sort of been saying to people. The whole structure of copper's been good, and it's been holding up near these highs, and these are actually all-time highs that we're talking about here. So this $5 level, and I'll even go back a bit further just to give people the big picture sense. So there's copper, very long term. So you can see that it really has been holding around this major level from that 2010 or 11 or whatever it is. So it's really been holding it in. This is where I'm saying the trend is now long-term trends up. It's been holding its support where I'd want to see it, at the 20-month moving average, nicely there. It's gone and retested and been rejected from this area a couple of times, right? But keeps bouncing. So one of these ones is going to go like that. It's just going to go vertical and surprise everyone and be at $6 in like a matter of months. That's it's like a coiled spring that is getting wound up. And with this US dollar coming off the boil, up through that $5.40 a pound, you don't know what's going to happen. It could really be at $6 in 3 months. That's sort of the setup that I'm seeing at the moment. So I'm actually in ETFs and that sort of thing, trying to play this run. And then you've also got things like platinum, which I've just been getting on. Look at this chart. It's sort of a perfect chart that I love, this sort of thing. So we've got a long-term period of going nowhere here. So that's nearly 8 years. Platinum coming off the boil is because EVs sales were going to take off. So the catalytic converters, which need the platinum, the demand for that is going to go down and possibly to nearly zero.
Mm-hmm.
So why be in platinum, So that story's reversing. EV sales not going well. Hybrid sales going really well because they're actually very efficient from an energy perspective and a good balance from being environmental but also useful and range, etc., etc. And you need more platinum and palladium in a hybrid than you do in other engines because they run a bit cooler. So all of a sudden, this whole story of get rid of platinum, no need for it, is like, well, actually, it actually could be really needed going forward, and there'll be more ICE sales than people expect over the next 10 years and whatever. So we're in a situation where we've had massive run in platinum. You can see here the buy and sell zones, buy zone, sell zone. We've done lots of work, been terrible for the last few years. And you can see from 2020, we had a recovery, which got to the point of control. There's the midpoint there. Another sell-off and just dead for a couple of years. And now here we are busting through that point of control. So in this situation, I'm looking at potentially it's heading up to the sell zone at least. What's that? 1,800 to 2,000. And we know that gold's at 3,500 and platinum is
Absolutely.
a lot rarer in the Earth's crust than gold. So we have platinum trading at, 1,300, gold at 3,500. And people at apparently in the jewelry in China, people are switching to platinum rather than gold because it's so expensive. So we're seeing a big
I suppose
uplift.
the logic too is a little bit like silver. Like the precious metals are all going to rally for some of those underlying dynamics around liquidity and money creation and all those same drivers of the gold price. Is
Yeah,
what I'm
they'll
trying to.
catch up. They'll play catch up, I guess, as the demand filters down to the things that are lagging behind gold. And palladium's actually just started to take off as well. So there you've got platinum looking just strong as an ox, and who knows where it could end up going on this rally. Of course, it's going to rest at some point, but I think this is a big rally because you've had that years of the Coke bottle getting shaken. So I think when it takes off, I think it can really go a lot higher than you think. And also we've gone copper, we've gone platinum, uranium. I mean, let's just have a look at some of these uranium stocks to give you a sense of the moves we're seeing. Here's deep yellow, which is one that we're actually in. Sorry, the chart.
That looks weird.
Well, it's because of years ago what was going on in the stock. So it's all been stuffed up. So here we go. Here is, just deep yellow. Look at the moves that we've seen. And this is since this Sprott came out, as I said, doing the raising, doubling the amount. They're going to be buying yellow cake. So spot prices are really taking off again. But then that gives you the fear that the underlying strength isn't really there, that it's more of a technical rally based on what Sprott's doing, and that maybe the heat's going to come out of it again. So I'm aware of those risks. But you can see that
Again, it comes back to that AI issue. Why is Sprott doing that? Because they see, or part of what they see is so much demand coming from AI in terms of electricity that it can only be met by nuclear.
yeah, there's all these big
And
long-term positives. I mean, you had New York is going to build the first nuclear reactor in years in the US, and you had Trump coming out and saying we want to help these projects get up and running. So that's all of the environmental and financing and all that sort of thing that the government wants to foster and help these projects get up and running quicker than they would have in the past. So it's a real renewal of this whole interest in uranium, and it's a long-term play, and it's just starting to really take off again. So I've been long that and I'm enjoying that run. So copper, uranium, platinum, oil has been smashed, as we know, and I've been saying over the last few weeks that I wanted everyone to wait until you buy oil. I needed to wait until the end of this month before I'd get a buy signal, and in the end, that's been the right thing to hold off because it's crashed with the sort of the fear trade in oil unwinding at the moment. So there is a lot of stuff going on.
absolutely. So I just thought I'd bring up something this week. And I should say, like, again, the small cap miners, juniors have had a torrid time over the last few years. So this is starting to bring that sector back to life. And this is, if you're interested in trading the market, or especially the smaller stocks like you did with the micro caps, but certainly what I do with Australian Small Cap Investigator and Small Cap Systems, when those go, they can really go. As I show, Developed Global there's doubled now in 6 months. And back when in 2021, that was the sector to be in for some really interesting opportunities. So these are good signs for all of us. I just thought I'd talk a little bit about AI today. Interestingly enough, because Belvedere, after he finished ironing your newspaper this morning, he always sends us a chat GPT sort of outline of what it thinks we should maybe talk about. And the thing that jumped out at me was ChatGPT makes a lot of stuff up. I think he's using ChatGPT anyway. I'm not sure exactly which AI he's using, but it flagged the recent chat about interest rates in the RBA, but he had it round backwards. I'm saying it's he, but it or whatever it is. They had it round backwards, saying that the concern was inflation was rising and that the RBA was going to rake hikes. And one thing I wanted to point out that Google, and Belvedere will bring up the chart, Google is now losing market share in terms of search to the AIs because people are bypassing Google and going direct to Claude, the names Claude, Perplexity, and all that type of thing. Now, that is a massive shift for Google because it had such a lock on the whole thing for so long. So clearly, people are seeking information from the AIs. It makes sense, yada, yada, yada. And we had another example from Greg, and Belvedere will bring this one up, where he was obviously Googling something about oil in the Middle East or what have you. And you can see here that the AI put Iran in the wrong place. It flagged Turkey as well. It put Iran, the word there you can see, in where Turkey actually should be. And I just thought that was so interesting in the context of the market that if you're looking for information, you have to be really, really careful to cross-reference what you get back. Because when they give you this information, it seems so solid. It's like when someone, like some comment, he just tells you, hey, man, these are the facts. This is what, and you go, oh, yeah, right. Yeah, cool. I believe it. But then you go away and you go, hang on a minute, that doesn't make any sense. And so again, the AI with Belvedere's printout, it had flagged this little stock called 88 Energy as a retail favorite. And I'm like, I know that's like a crappy stock from years ago. And you go and look at the chart and it's just been a total dog for years. And you're like, clearly that's not a retail favorite. And I'm never even, haven't heard anybody ever talk about that stock for forever. I only know it from years ago when I researched a bunch of energy names. So all I was just saying with that is you do have to be careful with what AI, especially if it's around finance and risking your money. You want to make sure that it's rock solid before you act on it.
I totally agree with that, and I'm doing a lot of research with AI, which I love. So I absolutely love it. But yeah, you do have to be sure and just double check things sometimes and read the original source. They give you the original source, and you just go in there and just check it out and double check it against something else. But I wouldn't throw the baby out with the bathwater. You've got to. There's so much awesome information for me with my research. It's just doing such a fabulous job of helping me with learning about competitors in the market and their results and feeding through so much information. So it is awesome. But yeah, I think you can trip yourself up because it's so good. It's so good that you end up believing all of it. So I think you're right.
But again, it goes back to, and again, this presentation I saw and with the market bullish, that this, I mean, it's only going to get better and better, right? So these early kinks will get ironed out as we go along. And they'll find ways to address it and all that type of thing. So we are, and another interesting component of this presentation was that if the US can lift productivity through this, that it will push the debt to GDP ratio down for them, and which is what happened in the 90s. This was the point that these guys made, was that in the 90s, I think the US debt to GDP was like, at the start it was like 50%, and the people projected it forward higher, and it actually went down because of the productivity out of the internet and computers. So if the market gets comfortable with that, that's going to take one of those fears away that knocked the market back in April, that the debt is too high, it's insurmountable. If AI is legit as a solution, then that's another worry that the market will climb, but it won't derail the market yet. So again, things to get bullish about and excited about. So you'd have to say right now, the market's not a bad place to be. Things are moving.
Yeah, you got to go with it. You can't deny that. I'm staying long. I probably wish I had more on. That massive smashing a few months ago, stuffed all my charts up by creating all these momentum changes, which have now switched back on. So it's just one of those things in the market. You can get some crazy volatility every now and again, but everything's pointing up for the moment. I've just got to go with it until the music stops again.
Beauty. All right. Well, we can leave it there. Again, as ever, you can give us a thumbs up, leave a comment. If you want Murray to chart a particular stock or a sector or a commodity, throw it in the comments. Again, if you don't subscribe to Fat Tail Daily, you can get Murray's charts in that Monday to Thursday. And hopefully we'll be in studio next week for next week's closing bell. We'll catch you next time.
Look forward to it. See you guys.